And Owen joins me now for a look at the day's business news. Hello again, Owen. Starting with Facebook, its first full week of trading, and yet it's losing money.
It's made billionaires of its founder, Mark Zuckerberg, Claire, and also many of the staff who were lucky enough to buy Facebook stock when it was still a private company, getting those preferential shares. The problem is if you bought into this company in the last couple of days or on Friday, then, as you say, you've lost money. Not a very auspicious start for the biggest IPO, certainly in technological history. It didn't really get the so-called pop that you often expect when these big tech titans float on the stock exchange. And ever since, the share price has been dwindling. Those who did buy into Facebook have now been left wondering if they've simply bought an oversold stock. Stephen Carroll has the story for us.
A status on the slide, Mark Zuckerberg could be posting about a second bad day on the markets. After its much heralded launch on the New York Stock Exchange, Facebook's early days in trading have been turbulent. First, a technical glitch at Nasdaq, swamped by the exchange of 581 million Facebook shares on Friday. Some analysts say that could have scared away investors on Monday, even though the problem was resolved. But others believe the plunge in price by 11% on Monday was because the company is fundamentally overvalued. Last year, Facebook had revenues of $3.7 billion. Its worth at the time of launch onto the market estimated at $104 billion.
I mean, the company is valued at something like 75 or 100 times earnings. And we really have no indication that it's going to be able to earn, the kind of revenue that would justify that valuation.
Despite the difficulties, Facebook is still causing a stir in trading. It was the most bought and sold stock on Monday on US markets, with 168 million shares changing hands. But the company has an uphill battle ahead to convince investors it can boost its earnings.
So you can see there, Claire, on the Nasdaq board, Facebook finishing the day at around 11% down. Let's just recap on those numbers for you for Facebook. Remember, at the opening, when it listed on the Nasdaq on Friday, the shares were trading around $38. So you can see that's a big dip down to $34 in just a couple of days. 11% down, in fact, it finished on the Nasdaq on Monday. More embarrassing, perhaps, for Facebook is the fact that all the US markets finished up as well. So it was a really glaring loss for this company.
What do you think then is the solution for this company?
Well, it has to be the business model. One of the big concerns going into this flotation was that companies like GM actually pulled their advertising from Facebook simply because the advertisers don't see where the money is to be made. The problem for Facebook, it's almost a victim of its own success. There are more people now in the world using Facebook on their smartphones than they are on traditional PCs. And the problem for Facebook is it hasn't quite found a way to produce a model of putting advertising on smartphones that can make it pay and certainly give advertisers an interest to stick with the company. So until it can do that, and until it can set out some sort of business model, then maybe, just maybe, the share price will remain depressed.
Right, we're going to look at the markets, and as you just said before, what's bound to hurt Facebook more is that while its fortunes are down, the markets are actually going the other way.
Absolutely, yeah, they are picking up. There are lots of bargain stocks out there now, perhaps not Facebook, but many others which have had a very torrid time over the past few weeks. So lots of people are jumping back into the market, thinking that maybe things have bottomed out a little bit. That's given a big boost, certainly on the Asian markets there. You can see the Nikkei around 1% up, with the Hang Seng, the Shanghai Composite, and indeed the Kospi not far behind.
All right, let's now get a few more company headlines. Qantas has announced it's splitting itself into two separate companies. The Australian carrier is to appoint chief executives to run two distinct domestic and international operations that will report separate results from July. The move follows an 83% drop in first half profits and just 24 hours after another round of 500 job losses.
Staying with the Qantas story, the chief executive of Jetstar, that's the budget offshoot of Qantas, is stepping down. Bruce Buchanan, who built Jetstar into one of the leading low-fare carriers in Asia, has announced he is stepping down as part of the broader management restructuring. He's been seen by many as a potential successor to Qantas chief executive Alan Joyce.
And fashion label Gucci has won just a fraction of the damages it was seeking from rival Guess over copyright infringement. A US judge awarded the Italian company $4.6 million, much less than the $120 million it was originally seeking against Guess. Gucci had argued that Guess had tried to copy its styles of wallets, belts and shoes. A court awarded Gucci an injunction against Guess over 4 designs, but ruled it wasn't entitled to damages reflecting lost sales or harm to its brand.
Now, next here on Business, a new flashpoint in the Eurozone crisis. EU leaders will hold their latest emergency meeting in Brussels this Wednesday to discuss the fate of Greece, among other issues. Their finance ministers have already been laying some of the groundwork, but the path is littered with a very familiar obstacle, that of Eurobonds, or to put it more plainly, mutualising European debt.
All grins between the German and French finance ministers, but underneath, they remain opposed. The French are pushing for so-called Eurobonds, which would be proportionately underwritten by all EU member states, mutualizing European debt in hopes of neutralizing its risk, an idea that isn't new, but is gaining steam as the region's debt crisis worsens. It's part of French President François Hollande's strategy to move away from austerity and towards growth, a move his finance minister knows could be controversial.
François Hollande wants to put everything on the table, including issues that can be agreed upon easily, but also ones that need to be examined closely, subjects that are contestable and might not be agreed upon.
Berlin says Eurobonds would unjustifiably receive low interest rates without forcing some members to adjust their fiscal policy. Debt-riddled governments such as Italy and Spain are expected to back the idea. Hollande has been a vocal proponent of common financing. He also endorsed project bonds that would share liability on European infrastructure programs. With opposing philosophies, the Eurozone's 2 largest economies, Germany and France, will have their work cut out for them to find common ground.
And that's it for business. Thanks very much, Owen, and thank you for watching. Do stay tuned to France 24. Stuart Norval will have the latest headlines in just a couple of minutes.